Hey everyone, welcome to another episode of Bitcoin Brief with your host Tone Vase, and I am joined by Jimmy Song. Hey Jimmy, coming to us from Korea. A little early over there, huh? Is it 5 a.m. yet?
Yeah, well, it's like 12 minutes to, I'm going to fly out later today anyway, so it doesn't really matter. Yeah,
That's good.
but yeah, it's a fantastic place. I've definitely enjoyed my time here. A lot of, it's starting to slowly shift away from shitcoins, so I'm very excited.
Yeah, I know. I mean, Roger Ver had that place locked down with like that in Japan. Everything was Bitcoin Cash, but it looks like they're coming, back to reality. Yeah, no, Jimmy and I were just chatting. Like the show really should have started like 15, 20 minutes ago. Though here's how the day goes, right? So yesterday I spent the whole day trying to do this show with Giacomo because Jimmy is all the way in Korea. And the schedules could match. I can't believe they let Giacomo teach at a university. What's going on over there in Europe, Jimmy?
Hey, they let me teach too, so I'm sure he's more qualified than I am.
And yeah, so we couldn't work that out. And then I kind of gave up on the show today. And then Jimmy texts me like, hey, let's do a show in 15 minutes. And I'm like, oh shit, let's get some stories together. And here we are. Meanwhile, I was supposed to get on a phone call like 15 minutes ago. That didn't work out, but I do have another call coming up because of the next financial summit. I gotta do a bunch of stuff to get that event up and running. So let's go straight to the stories and take it from there. Oh, Jimmy, wait, why are you in Korea? Your book launched, right?
That's right. My book launched in Korea. Let me see if I can, give me one sec. I really should have prepared a little better for this, but my book is available in Korean, Programming Bitcoin. And you can see their Korean letters and so on. And it's even got my Korean name over here. But yeah, this is available in Korea now, and you can buy it at it's published by O'Reilly through Hanbit Media. Amazingly, it's cheaper to buy in Korea than it is in the U.S. So it's the retail price is something like $27, whereas in the U.S. the retail price is 70. So I'm like, what the heck? I don't understand this pricing model. But yeah, we had a book launch event at Nantes a couple of days ago. It was a lot of fun, and it was a packed house despite the weather being like below 0 degrees Celsius. I guess in the 20s or 30s. So yeah, pretty amazing.
Yeah. All right. And since Jimmy's talking about his book, you can check it out, and you can check out Jimmy's website, programmingbitcoin.com. And if you're up there, you can take a look at his schedule for upcoming events. Oops, wrong schedule. You can take a look at his schedule for upcoming events. And I think it's just Vegas, right?
Right. It's in Vegas, February 2021. It's going to be during Unconfiscatable.
And there it is. Jimmy Song will be at Unconfiscatable. We will have more info for you on that soon. All right. Let's jump onto the stories. So Bitfury is in the news over at Forbes. And so Bitfury is launching an enterprise blockchain. I'm not sure what the secured by Bitcoin part means. I read through the article. The article is written by Michael De Castillo, who used to write for CoinDesk. So he should be very familiar with, Bitcoin and blockchain and how they work. And the first sentence, the first paragraph really bothered me. Bitcoin mining giant Bitfury has taken another step in its transformation into an enterprise blockchain software development. They're previously releasing open source software that anyone can use for free to run a permissioned blockchain similar to Bitcoin. I would love to hear how a permissioned blockchain is similar to Bitcoin in any way, shape, or form. And this is the kind of stuff that really bothers me in a lot of these articles. Jimmy, your thoughts?
I don't really understand what they're offering to people or how it's similar to Bitcoin in any way, shape, or form. This feels very much kind of like a very fluffy story to get get some consulting contracts or something like that. I mean, we know that selling services to big companies can be big business because they don't care what they're spending, oftentimes because they're getting money freely printed from the Fed. So it's kind of a weird story. I would really hate to see Bitfury go down this road. They've, generally done pretty well being, supporters of Bitcoin and so on. This is not a great look.
Well, it's not, but look what they're competing with, right? I mean, Microsoft is using blockchain to help firms trust AI. And they have a picture of Hal from 2001 Space Odyssey, right? So I started reading this article and all I keep thinking of, wow, I remember when I was at that conference at the University of Texas over in Austin, and you're sitting there trying to explain to people at IBM that AI is just a fancy name for a computer program, and and blockchain is a fancy name for a database, right?
Yeah, I guess there's some sort of public key cryptography involved, but yeah, it's really, the value prop is I mean, this hits all of the buzzwords. They get the bingo or something, I guess.
But this literally hits all the buzzwords. Like, I have to read this amazing sentence. Blockchain data manager takes on chain data and connects it to other applications. So transaction data from nodes or inside smart contracts can be sent to other databases or data stores. These are the sorts of places where AI can be deployed, or in the case of supply chain, where Internet of Things information can be brought to bear. Can they possibly stick any more buzzwords in a single 2-sentence paragraph? Blockchain, smart contracts, Internet of Things, supply chain AI, data stores, databases. What am I missing?
Yeah, you're not missing much. I mean, basically, they're trying to appeal to the some sort of corporate executives, I guess, that get impressed by words like this. It's just I mean, that is sort of Microsoft's main target audience these days. They've been going much more towards services, and in a sense, this makes sense. It's let's go find more companies to provide services for, and generally it's been IT, but they dress it up in these fancy words, and hopefully they get bigger contracts. I think that's what they're aiming for.
Damn, Jimmy, they missed one. They missed the word. Thank you, Fabio. They missed quantum.
Yeah, and I think also cloud, maybe. Yeah, I mean,
no, Jimmy, no. Cloud is so 10 years ago, man. We've gone past that. But cloud is so last decade, man. Well, it'll be so much easier to say last decade in like a year from now. By the way, I always get this confused. When does the new decade start? Is it in 3 weeks or is it in a year and 3 weeks?
I think it's in 3 weeks.
Okay. So this is a complete and utter insanity. But again, it's just buzzwords, right? I couldn't even read the rest of this article. But Microsoft is still in the news because clearly this part is not enough, that they are teaming up with a shitcoin, and the news continues to pump the shitcoin. I'm sorry. No, there was something else. Hold on. I think what did I click? Oh, this right here. I was going to be curious here. Underpinning this is a new tool called Azure Blockchain Data Manager.
Oh, so there is like a cloud component.
Yeah, always. Which the software giant released at its annual Ignite conference in Orlando, Florida, but was overshadowed by the announcement of a platform for creating enterprise tokens. What is this? Well, if you click on it, Microsoft unveils a platform for minting enterprise-ready crypto tokens. Now, we're going to get to Ethereum soon enough, but this is basically a platform to compete with Ethereum for smart contracts. And look how the article starts. Microsoft wants building blockchain tokens in the cloud to be easy as plugging in a printer. Okay. So basically, but this is the right path, right? Because like building your tokens on top of Ethereum makes no sense. You might as well build them on Microsoft's centralized cloud, right? Because you're going to have a lot more speed and a lot more scalability.
Yeah, absolutely. If you're going to be centralized anyway, why not? But again, it's kind of like, what are you using these tokens for? And like tokens are just so connected to scams at this point that if you're an enterprise, that's not the direction you're going to want to go, because your reputation is going to be in the toilet in a few years. So I don't know. It seems very strange to me that they're going in that direction.
All right. So some token called Engine Coin. I've never heard of this thing. Have you ever heard of it?
No.
So Microsoft's collaboration with blockchain gaming startup Engine has prompted a roughly 50% surge in the project's native token, because the project needed a native token over a 2-day period, right? So
they couldn't use Bitcoin.
Yeah. Engine Coin started to rise sharply Wednesday afternoon after Microsoft announced some kind of partnership. So Engine Coin was also apparently involved something with Samsung. I mean, I've never heard of Engine Coin, but we can go to CoinMarketCap and take a look where Engine Coin sits. So CoinMarketCap, view all. This will take, a little while to load.
I'm pretty sure it's not going to be in like the top 50, is it?
Almost.
Oh,
almost.
It's 59. Yeah.
Almost. It's 59
wow,
now.
So
after a 50% rise in its price.
Yeah.
So we can go to their website and take a quick peek. I don't really care how much the coin's worth. Blockchain gamified. Okay. Explore unique game development frontier. Is this looks like every single website I've ever seen, but okay. Engine, they have their own wallet. Well, what about the coin? What about the token? What's the point of the token? What's the purpose of the token? Go to the about.
I'm sure it's buying some sort of like game asset or something like that.
ERC.
I mean,
1115.
Yeah, I don't even know what that is, but the multi-token standard. Mint an infinite number of both fungible and non-fungible.
The gold standard for digital assets is an Ethereum-based cryptocurrency used to directly back the value of next-generation blockchain assets. You can purchase.
I guess it's the unit of account for certain game items or something like that. That's what it sounds like to me.
Wow. Like, who's being scammed here? Is it Microsoft? Is it like what's going on?
I'm sure it's whoever is buying the token, because they're the only ones that are leaving with that no longer have money that they used to.
Jesus Christ. Like do you think this is getting better or worse? Like this whole tokenization. I mean, you saw what's happening with Hex, right? I mean, people are dying to buy Hex, which is already down like 70%, and people are still buying it. People are literally buying Hex from Richard Hart for twice the value that they could buy the same Hex on an exchange.
Yeah, I'm. It might be people, or it might be a script that Richard is running. So it's
that's a good point.
I mean, we have no way of knowing, right? But yeah, I mean, this is the ridiculousness of the ICO market, and I don't know, maybe we still have some ways to go before all this stuff shakes out. I thought it was starting to die down, and at least here in Korea, it seems like a lot of people are down on ICOs, and this was ICO central a couple of years ago. So
yeah, so they got,
hard to say.
So Engine got 18 million for their token ICO sale in the 2017 hype. Perfect.
Yeah, how far is it down from 2017 though? Can you scroll up so we can see the chart?
Question. Well, it had a resurgence, right? But yeah, so the price actually made a new all-time high recently this year. So they've actually got better. But remember, well, actually the price versus Bitcoin did better. The price versus the dollars did not do better. And
yeah, that little bump at the end is what that article's about. But like they've had more dramatic rises and falls. So
oh yeah,
yeah. So I don't really get. I mean, yeah. Who knows what this coin is worth, or like how. Like most of these pump on like proof of press release, I think is what Giacomo likes to say. You know, like wherever they, whenever they do that, there's enough of a, you know, pump with the low liquidity that these things usually have. That you know,
well, this might have been the Samsung news, right? Like the Samsung news could have pumped it to 20 cents, and now it's been pumped to 10 cents. Well, good luck to you guys. If you know, I mean, you can speculate on this, but if you know anything about functionality of this stuff, like the token has makes absolutely no sense other than a money grab for a company that supposedly has been around since 2009. All right.
Yeah, that's like a model over here in Korea, and I think that's a Korean company. Basically, the way a lot of the ICOs worked here is that, you know, there was a company that was struggling as a startup. They couldn't raise any more money, and then they just did an ICO as a way to raise money. And at this point, it's kind of a PR firm masquerading as a gaming company, and you know, they just have to keep pumping out news or something in order to.
Yeah, because once you have $18 million. And you cashed out to actually have the $18 million, it's a lot easier to go and try to, you know, like form deals with Samsung if they're in your country and, you know, the people at this gaming company know the people at Samsung. You go and convince them to buy into your bullshit. And then once that news is out there, then you know, connect with some people at Microsoft and get them to buy into your bullshit, and we'll see what happens later.
All right. Yeah, it's kind of sad.
Hey, so speaking of Ethereum, they had a meeting and they decided to increase inflation on January 6th. How exactly is this different than the, you know, the Federal Reserve Committee to decide the interest rate?
Yeah, it's hilarious because the full story behind what happened is itself kind of indicative of the bureaucratic mess that they're in. So Ethereum has something called the difficulty bomb that keeps getting delayed, and that's supposed to be a marker for them to transition to proof of stake. But of course, every time that they're about to have the difficulty bomb, they just have some sort of central committee meeting and decide to push it out another year. And this forces some sort of a hard fork on the entire network almost every single time. This time, I guess, like, didn't make the decision in time. So the difficulty bomb started to affect the emission schedule for Ethereum. So, you know, each block was giving some amount of Ethereum, and it started to reduce the amount that it was given because they hadn't moved the difficulty bomb far enough out into the future.
Like so, the debt, like Jimmy, like the debt ceiling.
Yeah, something like that. Yeah, exactly. So at that point, they decided, well, so it started to actually get affected. So they had some sort of meeting and decided, let's just put it back to what it would have been without and pretend that we moved the difficulty bomb forward. And on January 6th, when they have a hard fork, I guess, what's going to happen is all of this, you know, it's going to go back to what it should have been, so that the quote unquote security on the network is decent. But yeah, I mean, this, you know, it's it reminds me of like communism a little bit. There's like a continual crisis, and in order to grab more and more power, and that's what these guys are doing. They have this difficulty bomb, which acts as a way for them to continually control the network and pass whatever they need to, because you need to do something anyway for this difficulty bomb, otherwise the whole network goes down. So in a way, this is a way to like push through hard forks without anyone really scrutinizing it very much.
Yeah, and like this is hilarious. Like even like the first quoted line in it, or like the first paragraph in this, like made me crack up. The call itself had technical problems, so it's not clear what exactly was said.
Yeah. This is the Ethereum Central Committee. Yeah, I mean, the hilarities of any government, you can see sort of like forming in Ethereum's governance, like pretty much with anything that they do. So
I know. Meanwhile,
this is what you guys signed up for, man.
Yeah. Meanwhile, all of this shit is being built on top of Ethereum. It's hilarious. At least the smart ones are running off of Ethereum and onto Liquid. All right.
I mean, they're running to whatever pays them more money. It looks like, unfortunately.
All right. So speaking of centralized applications on top of centralized blockchains, brings us to the title: Ethereum's top DEX is relaunching to tap Istanbul's lower gas fees.
I mean, basically, the gas fees are necessary in Ethereum because of its Turing completeness. Otherwise, you can make every Ethereum node just run in an infinite loop. And they've had to correct the gas fees like multiple times because it's so hard to figure out what will actually cause a loop and what can create situations where you can basically denials of service the entire network. So apparently they figured out some optimization where gas fees will be a little cheaper, and somebody's trying to take advantage of it. I suspect that if there's any sort of looping construct that becomes cheaper as a result, it might end up actually DOSing the whole network. But I don't know. This is a sort of crap you have to deal with. Is the tax collection office might have some sort of flaw that nobody realizes right now. But I mean, this is what they're playing around with.
This is insane, right? Like for Aurora Labs, the company behind IDEX, how do you have a DEX that is supposed to be decentralized, that is created by IDEX, that is owned by the company Aurora Labs? Like, can somebody explain this to me?
Well, I mean, it's cognitive dissonance or marketing BS, whatever you want to call it. It's just completely a lie in of itself, or an oxymoron. I don't know, whatever you want to call it. It's just idiocy.
Well, like I loved it, like a couple of weeks ago when the decentralized stablecoin called MakerDAO decided to change its name and rebrand. Like,
what's their new name? I don't even know.
I don't know either, right? Like,
okay.
So anyway, guys, you gotta stop buying into the bullshit. All right, here's an article: How DeFi Cannibalizes POS Security. I'm actually interested in this. I haven't gotten a chance to read this whole thing, and here's your MakerDAO, whatever that is. I think MakerDAO is the company behind MakerDAO, and I'm sure somebody owns MakerDAO.
Well, DAI is the stable coin behind MakerDAO.
No, I think that's what they changed. That was the rebranding.
Oh, okay, possibly.
DAI rebrands. MakerDAO will replace what?
Rebrand CDP.
Anyway.
Rebranded DAI token. Yeah, that was a while back though.
Okay.
Okay.
So hold on, let me,
how DeFi, yeah.
before we get there, right? So yesterday I did a trading Bitcoin show. And one of the questions was, Tone, are there any like DeFi projects that you believe in? And my answer was no. And I said, here's where we have to start. So first of all, if your DeFi to me is a short term for decentralized finance. I could be wrong. I could be an idiot, right? But to me, when I hear DeFi, I hear I am working on something for decentralized finance. Fine. The conversation starts at, let's go to the lowest bar. Is your DeFi project being built on anything other than the liquid sidechain? If the answer is yes, you don't have a DeFi project, in my opinion. It stops, right? If your underlying base layer is not decentralized, and we can debate if liquid is or isn't decentralized, but I know it's more decentralized than anything else out there, than any other blockchain. So if your DeFi project is built on top of Ethereum, you don't have a DeFi project. In fact, if Ethereum is a little late getting together into a committee for a room one day, there may be no Ethereum the next day, so you have no project, okay? So if your DeFi project begins on anything other than liquid, and the jury is still out whether liquid will still be with us in a month, a year, a decade, who knows? So if you're being built on top of Ethereum, you don't have a DeFi project. Let's start there. After that, I don't believe anyone could build a decentralized project. I mean, we got lucky with Bitcoin, and that's where it started, and that's where so far it has ended. So I will debate you all day long whether your actual project is decentralized, because there is a company and there is money and there is payment to developers. And at the end of the day, someone could be placed into a room with the right incentive, whether positive or negative incentive, and anything can be changed. And third, we can debate also all day long whether whatever it is you're building even requires decentralization. So at the moment, my answer is I have not seen a single DeFi project that I have found remotely interesting. Maybe Jimmy has one in mind.
Well, the only one I have in mind is Bitcoin. Bitcoin's the one decentralized finance project. Everything else, including stuff on Liquid, is not decentralized, so it's not DeFi. But this article in particular is actually very astute in figuring out what the problem is. The problem is that when you have DeFi or like a bunch of assets that are locked up in loans, or the ability to get a lot of loans using these platforms, you can essentially get a large control of a particular currency. So, for example, you can get a lot of like Ethereum, for example, by getting loaned it using DeFi. And at that point, if you have a lot of the assets, then you've completely compromised proof of stake, because you have you're able to leverage however much money you have to get as much of that particular asset, at which point you'll basically, you can at that point control that entire network, which to me is like so obvious, but I like the article basically spells out exactly how you can do it. But at that point, if you have some sort of DeFi and you have some nominal proof of stake, algorithm for your chain, you're creating incentives so that somebody on the can loan not lend out, borrow a ton of that asset to control the network with proof of stake.
Yeah, again, like all of this has been so obvious to us, like in forever. Maybe not the little details, but like it. Anyway, I don't know where to begin, but let's move on to some actual Bitcoin news. Lightning is progressing contrary to the haters. Bitcoin Lightning Network payments hit Bitfinex in industry's first. Can someone explain to me how Bitfinex, the company that everybody hates and everyone thinks is a scam, is the first one to implement Lightning payments. What the hell are the other exchanges doing with their billions of dollars? In some cases that they printed out of thin air, Binance.
Yeah, I don't know, but the fact that they implemented it is a great sign. The only thing I would complain about is that Lightning Bitcoin, it has a different ticker symbol on Bitfinex, which is kind of strange. But I mean, apparently there's a one-to-one exchange with BTC. I'm sure it makes some programmers' life a little easier, but from a UI perspective, they're the same thing. So why do you have a different ticker? I don't know. I suspect that this will allow sort of arbitrage to be much faster. If you do have multiple exchanges that implement Lightning, then because the liquidity between them will be very quick, then you should be able to have prices that are very similar across exchanges, which would be a good thing overall.
All right, so there you go, guys. As much as everyone hates Bitfinex, they seem to be, business as usual over there. Don't mind the New York Attorney General trying to take them down. They did move Tether onto Liquid. They're now implementing Lightning. I mean, it makes sense. I mean, they do work pretty closely with Blockstream as far as, I don't know any details, but clearly they are working with Blockstream in order to get this done, because Blockstream are the experts at the Liquid sidechain. They may not be the biggest experts in Lightning, but they do have their own Lightning implementations. They have developers on Lightning. So obviously, if you want to, be in the latest levels of Bitcoin development, you gotta, get involved in Liquid, and you gotta get involved in Lightning. I mean, what else can we say? As much as everyone likes to hate on Bitfinex, clearly they're the only ones that understand where the freaking innovation is in this space.
Yeah, apparently the other thing that's kind of exciting is you can use Bitrefill with Bitfinex's Lightning. So you can purchase like any gift card you want using the Lightning network and pretty much get instant payout. So hopefully this sort of innovation continues, and we'll see where it goes.
All right. Hey, final article, more of a finance article. State Street did a survey of their clients, I guess, and 38% of those clients will put more money into digital assets. They're not being very specific about which these digital assets are. I did like it at the end that a decent percentage, 45% of survey participants responded that they are expecting a Bitcoin ETF to be approved in 2020. I think they were being a little too optimistic. I'm thinking more like 2021. I'm not really expecting it in 2020, but in 2021, we might actually have a Bitcoin ETF. But this is pretty good to hear. I also saw another survey that like lots of millennials are holding GBTC in their retirement funds as opposed to Gen X or, boomers.
Yeah, and I mean, who knows what will happen? But I mean, it's interesting because State Street is more of a commercial bank, and I wonder if besides the wealth management, there's probably some companies that are thinking about this as well. I mean, the level of money printing that's going on in the United States is just insane. So I suspect that this is a reaction to that. I mean, we know what's happening in the repo markets and just the amount of emergency lending that's happening with the Federal Reserve. But I mean, this is what happens when you have irresponsible governments that print money whenever they want. I mean, they're really the original shitcoin. So I suspect that this is reflecting that in some way.
All right, that's pretty much it for the news. If you have, once again, we're joined by Jimmy Song. I'll take a look at the price of Bitcoin in a few minutes. Jimmy is going to be teaching his next programming course in Las Vegas, where we are having the Unconfiscatable conference. Please sign up. poker game. The conference itself is a one-day event. It's still fairly cheap at only $250 to attend the conference. I don't know if we could have made it any more cheaper, but that's as low as we can go. So go ahead and attend, guys. The poker game was great last time. It's going to be even better this time. All right, Jimmy, any final closing thoughts?
I mean, we have the book, Little Bitcoin book, an audio book, Spanish and English, and we will be getting Hindi and Portuguese out very soon. But yeah, it's doing very well. It's a great gift for Christmas if you want your boomer relatives to learn more about it. So that's the Little Bitcoin book. Lots of options on how you can read it, and hopefully we get pretty much every single one that we can.
Yeah, we gotta buy a bunch of these for Las Vegas. Especially if you're coming, we can get some signatures done. A bunch of these books, a bunch of programming books. Still working on Saifedean, trying to get him back there, and maybe we'll have some of his. But it'll be a lot of books. Hey, are there any other books you would recommend? Obviously, besides Saifedean and yours too. Any other crypto books? Obviously, Andreas, not the Ethereum one.
There's a ton of books. There's, I mean, at the very basic level for kids, I think you got something like Bitcoin Money by the Bitcoin Rabbi.
Oh yeah. Where is that one? Hold on.
Yeah. There's also.
I actually don't know where it is. I have to find it. I think it's over there.
Yeah, you also have, besides a Little Bitcoin book, something a little more advanced is something like Inventing Bitcoin by Jan Pritzer. Something a little more advanced than that would be Grokking Bitcoin by Callie Rosenbaum. And if you're a full-on programmer, then you have my book. If you need something a little more referencey as a programmer, you have Mastering Bitcoin. There's several other ones that I've seen too that have come out, although I haven't read them, but that might be really useful as well. But there's a lot of good books on Bitcoin now, and it's all setting up for a bull run eventually. But we'll see when that happens. But that's more your realm of expertise. So
yeah, we're gonna take a look. Oh, also today I got a haircut, man. Check this out.
Nice. Yeah. Did you bick it? Like take a razor and
not me. I went to my barber. I haven't. I don't have the right equipment yet to shave my own head. I'm kind of new to this, but it's pretty cool.
Oh no. Yeah, no, I've been shaving my head. I do it every couple of weeks. Yeah, it feels really nice, and you don't have to worry about it. Though it does get a little cold in the winter, and I know you live in New York, so.
Yeah, I got to keep the beard going though. I'm not a big fan of the beard, but I can't have a shaved head and no beard. That's not gonna look
Hey
great.
man, facial hair. I mean, I think it's great. It's definitely warm and everything else.
All right, guys.
Anyway,
I think it's time to say goodbye to Jimmy.
All right, guys, this song is done.
Later, Jimmy. Have a safe trip back from Korea. All right. And we're going to get back to the price, and let's see what is going on. I took a look at the oscillators yesterday, so this is going to be relatively quick. The current candle is, looking decent. But remember, we still have not even broken last week's high. And this week is coming to an end. Today is already Friday. Bitcoin continues to consolidate. And if Bitcoin can break out, but for me personally, I would need Bitcoin above this Fibonacci line, whatever line that, 50% line, 85. I might even need it higher than that. Like I really almost need Bitcoin to go above this high. The weekly chart is bearish in nature with a bullish candle. And there's really not much we can say about that. I guess the good news is the 200-week moving average is rising. But that also means that we can break that moving average, at a higher level. So we'll see what happens. I'm still nervous. Look, if I'm nervous about the price of Bitcoin, my computer restarted this morning. So I'm going to close a bunch of these tabs. I don't need them anymore. All these links are in the video description, guys. I think. I hope. Because I just closed them all. All right. So this is the daily chart. The daily chart is on a green one price flip, and considering it's only about 5 hours to go, that's probably where we're going to end. So what we're about to form right here is potentially it's a little too early to call this a descending triangle. You can clearly draw an up, it's clearly a higher low. And if we turn, it's clearly a lower high. So at the moment, everything is like neutral, right? Like the weekly chart is kind of neutral, but it's leaning bearish because of the red count. On a daily chart, we're just flipped over to a green, but we're in a bearish posture. So again, it's completely neutral. I'm not leaning one way or another right now, but the weekly being more bearish than bullish makes this problematic. Also, while this thing is consolidating, look what's happening above it. Look at the moving averages. All three moving averages are now below each other and trending down. You don't have this situation in a bull market. I don't know if that's ever happened before. Let's look for the last, like good luck. I would love, and one moving average, I'm using 50, 128, and 200. I would love to see someone show me where they're all rolled over, right? I mean, if you look back, here is where the 200 rolled over. And after the 200 rolled over, we were in this situation of the 200 started to decline. I think it happened right here on June 18th, 7th of June, 2018. And where was the price? The price was, rallying up a little bit. The price was at exactly the same level where we are now. It was at 7,700. And that was back in June of 2018. The price ended up bottoming out at 3,000. And so we can go to the prior time, the 200-day moving average does not roll over often. And this is not a good sign at all. And when it rolls over, obviously the other two are trending down. I mean, look, anything can happen, right? We can take these moving averages to the S&P 500 and take a look how often in history does that happen and not cause huge problems down the road. Here's another example, right? Let's see, where did the 200-day roll over? Let's go back to the 2014 bear market. Here's the 200-day rolling over. Now, when that happened, the price was actually above the 200-day moving average. And the low level moving average was already rising. In fact, there was a point where the price was above all three moving averages, and two of them were rising with the 200 falling. And this was when the price was consolidating. You know what? The more I look at it, oh, this is not good. The more I look at it on a daily level by comparing moving averages, and I think I have way too many annotations here, which is maybe unfortunate. God damn. Yeah, it's going to be hard to read, guys. But the more I look at this, the more the current picture is starting to remind me like the top of July 19, July of this year. The more this is starting to remind me of this. I didn't even, I don't know. I mean, you can go back to my articles. I may have to do a larger, a bigger show on this, right? We rallied hard from this $300 level all the way up to the $700 level. It was only a 2x move, right? It was only 100% move, but it was very substantial. And we only doubled in price here. And then we formed this triangle and the moving averages rolled over. And then Bitcoin had an insane catastrophe that we obviously recovered from. And the current environment is really starting to remind me of that, but on a much longer time scale. I may want to look at this fractal a little bit closer. And look, we formed a bunch of triangles here. We could not break to the new all-time high. We made a bunch of triangles, and down we went. And if you look at the time spent, oh boy, like this is making me pretty nervous here. If I look at how much time we spent, and there's 2 time markers we need to use. I'm like processing all this information now live, guys. So this is, bear with me here. I might have to write these numbers down. So this was 134 bars to the low, and then 183 in total. I should probably do it piecewise, right? So this is, what do we got? Let's say 130, let's round. And let's say this is 130 and 180, so 185, right? So 130 plus an additional 35. Do I have Notepad up? I'm just gonna write these down on Notepad, which you can't see. So it's 130 bars to the low, and then plus 35 bars to the second high, to the lower high. I'm just writing it down, typing it down. So now I want to, I mean, again, it may not be the best comparison here, right? But we always like to compare what the hell's going on. So if I evaluate this from the high or thereabouts to the low, 360, took exactly 1 year. Yeah, that's right. It took about a year. So let's do 360. That's to the low, plus an additional oh, and I got a meeting at the top of the hour, so this ain't gonna last too long. Plus an additional, let's say 200. So 360 plus 200 to the high, right? So let me get my notepad. So now we have 360 plus 200. So the math on this, right? So 35 bars out of 130. So yeah, so we got to that top a lot faster before. It took a lot longer this time. So 130 is about a third of a year. And now it took us a year to get down there, and it took us a little more than a third of a year. So 3 times longer to get down, and a little more than 3 times longer to get back up. So, oh boy. So what you're looking at is, you're looking at the current cycle being almost 3 times longer than the last cycle. And that is scary, to say the least, right? If this secondary top matches this secondary top, and everything is taking 3 times longer to happen, you got a big problem. So first of all, the other thing we need to see is, I want to see what that drop was. That was a drop. My best guess, about 65%, 70%, right? That's close. I mean, our drop was about 80%, I believe. So the drop was bigger this time for us. hard to match it around here. There it is. I'm on a large scale, really. I should take the magnet off. That was about 80. The other one was about 70. So the drop was a little bit deeper. It clearly took 3 times longer, almost 3 times longer, about 2.8 times longer. The rise was also bigger, okay? Now, the secondary fall is the problematic one. This was a little over 300. This was about 150. So this fell 50% from that low, a little more than 50% from set low. So that's the big problem. Oh boy. That's the big concern. So if I put this somewhere on the low here, man, I gotta drop the magnet. Hold on. Otherwise it's. Yeah, I never really thought about it this way. No one, I mean, I don't watch other people, so I have no idea who else is talking about it. Everyone is gonna be like, Toad is copying this guy. I'm like, no, I just saw it. So a 50% drop from there, take us to that 1500 zone, right? So I'm not saying this is going to happen. I'm just saying that this is what's sticking out in my mind right now, because the current environment is reminding me a lot of this, especially with the moving averages rolling over. And that is concerning. That is very concerning. I hope we just make a secondary low right here around 5,000 and be done with it. Hell, I hope we go to 100,000 tomorrow, right? But I find it hard to give a logical reason as to why the rollover of these moving averages is not reminding me, oh, I do have a reason. I have a reason as to why it's not. Because over here, they were rolling over for the first time. Here, they're rolling over for the second time. So that could be the big difference. Okay. So the price picture, while the price picture is reminding me of this, the moving average picture is different. This did not last long enough to turn those moving averages back up. So it's actually not the same picture. I'm not looking at the live chat, guys. Maybe somebody pointed that out. Someone says this comparison is insane. Compare the percent drawdown between 2014 and 2019. Well, I did. The drawdown is very, very similar. The drawdown was 70% here, 80% we had. So it's almost identical, right? The more concerning part to me personally is that the run-up from this low in April of 2014 was only 100%. But the run-up from the December low was 400%. And that means that the run-up was a lot more exponential. And because the run-up was a lot more exponential, there is a higher probability of a catastrophe following it, which happened here, but that was the original big drop. So there are differences there, but it still goes back to show you that this is only the third time in Bitcoin history that the 200-day moving average is rolling over. And if you want to compare history, the last 2 times, here's another way to compare, right? I know nobody wants Bitcoin to go down. Nobody does. I don't either. I'm just telling you what I see in the charts. Here's the thing. Another metric you can try. I don't know what the results are going to be. That's why we're about to do it. What is this? Oh, 152, because I know that's where price was. Okay, one more metric. Here is when the moving average rolled over. How far did we fall? by percentage from the day of the well, that's how much the price fell, right? How far below did we get from the 200-day moving average? Now, it so happens that the price was right at the moving average, and we fell 75% from the moving average to the low. Okay, now let's delete this, and we have one more sample case, right? The moving average rolled over a few years ago, a year ago, right? Here's where the moving average rolled over. We can zoom in to get the exact spot. From the moment where the moving average rolled over to the low, what do we got? 70%. Guys, that's almost the same thing, right? 75%, 70%, almost the same. Now, however, the price was not at the moving average. Like, the price was in the vicinity of the moving average, while the moving average was not that far off. So it's still a fair comparison. The price at the time was sitting way below the moving average, and the price fell 60%. Okay. Now let's look at the current situation. We have a rolling over of a moving average, and the last time this happened, the price bottomed out 70% lower than the moving average. That would be here. Jesus. There. 2,800. I'm sure you've heard me say that number before. Interesting that that's exactly where that puts us. Very interesting. Now, what was the price number? I already forgot. When the moving average rolled over, the price was here, and this was there. That was 60%. So you get to save 10 percentage points, right? So 60% from the price, I can do, guys, it doesn't really matter if I use the price today or the price a few days ago. It should make a big difference. There it is. That's 60 and that's 59. So same thing, right? And that puts us, interesting, at 3,100 for a double bottom. Ooh, I don't like double bottoms. If I had to choose between the two, if we are going below 4,000, I will certainly take 2,800 or lower over 3,100 to 3,500 as the low. So this is not a good situation, right? This is why Willy Woo, back when we were hanging out back in September, if you go back to that video with Murad and Willy Woo, this is why Willy Woo was so certain that we would not, go below the 200-day moving average. And I don't think he saw the 200-day moving average rolling over, because on-chain volume did not, show that at all. As far, I don't want to, speak for Willy. I'm going to have Willy back on the show. The 200-day moving average rolling over is very significant. We have two other precedences for this. I'm going to go to the S&P 500. I'm going to look at the same moving averages. How come I don't see the values there? Symbol, nope. Appearance, no. What am I missing? Status line. Indicator arguments, there we go. Oh, this was taking up way too much. Damn, okay. That's the new indicator, actually. I have to, still needs a lot of testing. So I'm using 20, 50, 200 because, well, the 50 and the 200 are there, but I'm using 20 instead of the 128. So the 200 is what matters, right? So let's go to the daily chart of the S&P. I have it in the futures, but I can't go back that far. So if I go to the daily chart here and I do this, and I drop, everything else, and I don't need sequential. Or you know what? I'll just do this. I'll hide that and I'll hide that. Much better. So let's forget the 20-day. Let's look at the 50 and the 200, right? Here's the S&P. Yeah, the 200-day in the S&P does roll over quite a bit, and then we go higher. You know, rolls over, goes up a little bit, rolls over, goes up a little bit. Okay, so not the best of comparisons. So here's what you got to hope for, right? Here's what you got to hope for Bitcoin, that the 200-day moving average has rolled over, but the price does not go lower than the prior swing low. Do something like this, and then start to go higher. That's a good question, John. Does the time before the halving make a difference in the previous top that you're comparing? It's hard to say, mostly because we've only had two other halvings, right? So if we go back to the last time, see, last time the halving occurred here, all the way out here. This is where the halving was. And the top came very soon after the prior halving. So here was the halving. Basically, the halving was in the same year as the high. The halving was early 2013, and the high came in late 2013. So from low to high happened in the same year. Here, took a little longer. Took about a year and a half. Not that much longer. You're right. It wasn't significantly longer. That's a good question. We're going to find out. But here's what didn't happen last time. We didn't rise 400%, right? The halving hype might have peaked early. The big difference between this halving that took place here and the current one coming up is that by the time this halving happened, Bitcoin only went up 100%. It never did this unreasonable exponential rise, but it did do it here in the pre-halving hype. We still have, 6 months before the halving, so we'll need to discuss this closer to the halving. Someone says that 70 and 84% drops seem similar, but they are 50% apart. That is correct. They are 50% apart. That is exactly right. But I am measuring from the top, and that's why it's very, very difficult to time the bottom. Here's another example, right? Everyone assumes that this is the low of the bear market of 2018 at an 83% drop, which is good enough. But if we are to fall another 5 percentage points, right? That takes us all the way below 2000. So yes, right? This is almost 50% drop, 40% drop from the low. But from the top, it's only a 5% difference. So for me personally, and you guys most of you have watched my videos all throughout the bear market. Most of you have watched my videos all throughout the bull market, of which I was a bull the entire time. Maybe not at the very end, though at the very end, I was still a bull. Over here, I was very, very cautious. So what's the best way to say this? I felt that we bottomed out too soon based on time. The price was okay, time wasn't. I felt that this bear market needed to, you know, screw with people some more according to time. Time is running out. The halving is coming. The price has already rallied big time. And it puts me personally in a very concerned position because I'm a little nervous that if the price falls too far after the halving, it could be trouble. Actual trouble. So let's hope that we rally hard and everyone becomes a bull. I will be a bull above 10,000. But until that happens, my most optimistic, pessimistic target is this corner. Though if we are going to make it all the way to 5,000 before the halving, I would love for it to go below 4,500 so I can at least get a free stake out of it from Crypto Man Ran, right? Would you consider a recession to be a deflationary event for the dollar? Yes. I would also consider it to be a trouble for Bitcoin. Good economic environment helps Bitcoin, not a bad one. You want Wall Street to get as big of bonuses as they can to spend that on Bitcoin. If Wall Street ain't getting their bonuses, ain't no one's buying Bitcoin from that industry. You want maximum bonus. You want the guy at Goldman Sachs to get a $3 million bonus. If you are a Bitcoin holder, you want that. You want the Goldman Sachs employee getting a $3 million bonus because he is way more likely to put 500,000 of that into Bitcoin, okay, than him getting fired before bonus season. What money is he going to put into Bitcoin then? All right, I got to go. I got to jump on a call here. We can glance at gold real quick. Yeah, I'm not surprised gold's falling because S&P is rising. Oh, wait, market's about to close. Let's do this. Forward, double click on that. The market, oh my God, look at that. New all-time high next week coming. Holy, oh wow, I did not even, I'm like looking at the S&P 500. I had no clue today was a rally. Okay, show me those zero hedge articles again. Show me the zero hedge articles. Show me the zero hedge articles. S&P is going to zero. God, I hate that publication. It's good for like breaking news and like facts, but don't ever read their interpretation of those facts. Just read the quotes. Don't read what they think the quotes say. Like Zero Hedge will report, this month was the highest, the most number of people got hired than at any time in American history by percentage. And Zero Hedge will still put a headline in, markets are going to crash. It's all going down. It's all a lie. No one is getting hired. I wanted to go to a comedy club this weekend, Saturday. I called on Monday to reserve. And you know what the comedy club said? Every seat is sold out. I called Monday for Saturday and every seat was sold out. Yeah, recession's coming. Sure. That's how recessions are made. Can't get a seat anywhere, no restaurant. Try to go to a nice restaurant on a Thursday or a Friday or a Saturday night. Good luck with that. Without a reservation a week in advance. Yeah, recession's coming. Sure. The yield curve is concerning though. We'll see what happens in 6 months. Right now, until I'm able to get a nice restaurant reservation on a 24-hour notice, I don't see a recession. Yeah, I don't know what you want me to say. New all-time highs incoming. I've been a bull of the S&P 500 since before any of you knew who I was, and I remain so today. I gotta post that presentation from like 3 years ago, how the Dow Jones is gonna go to 100,000 or something. I did that years and years and years ago. All right, I gotta run. I gotta jump on a call. I will end it here, guys. Hey, Unconfiscatable. I don't know if I have any other announcements. Shoot, I promised something I gotta do. Options workshop. Products and services, options. I made a description. There it is. Go to details. Here's your description of the options workshop. Okay. I only teach this twice a year. It'll be 2 days, and I still gotta redo my entire presentation that I did back in August. All right. So check that out, guys. Hopefully I'll see some of you there that are interested in options. Not everyone is interested in options. I love options. My favorite leverage instrument to trade markets is options. All right, that's it. And that's it for me. That's all the announcements. Come to Unconfiscatable. We'll have a great time. Talk to you all on the next one, guys.